In this part of the book, we're going to be looking at how you secure the financial resources, not just to set up your IC sweet spot, but to keep it going. And we begin by considering some elephants in the room. Then we'll look at why there's usually a huge amount of financial potential locked away inside most organizations' current IC practices. We'll bring it to life with a real-world example of this potential, and given its scale, it will be important not to get carried away, so we'll look at how to ensure your leadership team takes such numbers seriously. And finally, we'll explore what it would take for you to be able to make a compelling business case for the resources you want. Before we get there though, we need to start with those elephants in the room. Before looking at the elephants themselves, it would probably be useful to remind ourselves of what a financial mandate should deliver. You might not need all of these yourself, but if you do, then this part of your mandate can secure you enough budget to ensure your channels and other equipment are up to the job, that you can make all the investments you need to learn any new practices you might have to introduce, and that all your team have enough time to attend any necessary training or do the reading they need, assimilate their learning, and slow down for a short period while they get used to new ways of working. And if your IC function is suffering from being chronically understaffed, it can get you enough people on a permanent basis. Obviously, to secure this kind of investment, the leadership team are going to have to buy into the benefits, and getting them to do this may not be all that straightforward because of those elephants in the room. Now, of course, the term elephant in the room refers to one of those problems or objections that everyone probably knows about, but no one speaks of. And one thing I've come to realize from working in this field for the last 2 decades is that some internal communication specialists, not all, but a significant majority, aren't nearly as comfortable with numbers as they are with words. And if this is the case for you, we clearly need this part of your mandate to be as easy to develop as possible. So before going any further, I want to reassure you that it can be, even though there's actually a second elephant we need to acknowledge, and this second one is a whopper. This elephant concerns the fact that, one way or another, internal communication has an impact on virtually everything that most people do at work pretty much every day, which makes it almost impossible to isolate its impact, for better or worse, from other factors, or to assign to a single internal communication or internal campaign the sole responsibility for the success or failure of any particular business initiative. And over my years of working on this, it's become clear that this mother of an elephant has given birth to many more, which are all in this same room. There are loads of them. And if you're ever going to get a mandate that's sustainably fit for purpose, then during this webinar, we clearly need to tackle them all, starting with the very question of how we even try to prove the value of a fit for purpose mandate. Most obviously, of course, we can see that a fit-for-purpose mandate may well involve an increase in your budget, maybe short-term, maybe permanently. So the people who need to sign this off may quite reasonably want to see a commercial business case to justify it. Many internal communication specialists try to do this by measuring the value of what they do. However, if you don't currently have the right mandate, you clearly need to change the current situation. And if all you're doing is proving the value of what you've been doing up to now, where's the catalyst for change? All that's going to show is what you're already worth. What we need to demonstrate is your untapped potential, what you could be worth if you had the right mandate. But how on earth could we do that? Well, we need to start by making a distinction between internal communication investments and internal communication costs. The investments are necessary. You can't not make them, but the costs are all unnecessary. So for our purposes, there are 3 investments we need to pay attention to. The first is the budgetary outlay you need to make in things like agency fees, maybe print, maybe venue hire, intranet tools and the like. And then there's production time. Not just the time of the IC specialists, of course, but also that of clients who are briefing you and anyone involved in approving and signing off communications. And finally, because it's internal communication, we inevitably have to pay for the audience's time. So all 3 of these are obviously necessary, but they may be unnecessarily high because of wasteful production or distribution practices. First among these, there can be clients changing their minds about what they want, which is always going to increase the production time and may sometimes waste some budget too, particularly if an external agency is involved. Now, sometimes moving the goalposts is unavoidable because business circumstances have changed in ways the client couldn't possibly have predicted. But often it's simply that they never thought through their needs properly at the start. And sometimes this can even lead to projects simply being ditched. And then, of course, there's the possibility of wasting audience time, and that cost can be huge. But that's only the start, because of course internal communication doesn't exist just for its own sake. It's there to support employee performance, which means there's a stack of other costs waiting in the wings if a communication fails. Firstly, and most obviously, if the communication doesn't do its job, it's probably going to need to be repeated unless it related to just a short-term issue and the moment's past. And repeating a communication means incurring the 3 investments a second time around. Then, if a communication fails, it's likely to mean people having to work without all the information they need, which can give rise to mistakes and misunderstandings which take time to put right, not to mention potentially damaging your organization's reputation and other consequences too. And then all the time people may be spending receiving communications they never needed, or repeat communications, or correcting mistakes and misunderstandings, they're not actually getting on with productive work. So opportunities to innovate, generate additional revenue, or identify and realize cost savings may be being missed. And none of this can possibly help employee engagement, can it? So there may be some employees throwing sickies, which can hurt productivity and maybe increase overtime costs, whilst others just walk out the door, which can also increase recruitment and training costs. And at its most extreme, it can even lead to a particular department or project or program, or even an entire organization failing to fulfill its very purpose. Clearly then, the costs of IC practices which are unfit for purpose can be extraordinary. And we can demonstrate at least some of the costs of your organization's current practices through a process of IC financial auditing, which helps you understand and demonstrate the untapped potential within your organization's current internal communication practices. And it does this by enabling you to credibly measure your organization's IC investments and the first 5 costs. We don't concern ourselves with the last 3, but why not? Well, perhaps our biggest challenge when it comes to making this business case is one of credibility. So we discard the last 3 failure costs for 2 reasons. Firstly, they become increasingly detached from the IC process itself, which makes it trickier to credibly connect them to internal communication practices. And we don't want to contaminate the credibility of the other costs by trying to force these figures into the mix. The second reason is that even though these last 3 costs may be significant, so too should be the first 5. So if you can't get a mandate with these 5, the last 3 are unlikely to do it for you. So, how does IC financial auditing work? Well, we use a series of carefully targeted employee surveys and some very sophisticated number crunching. But can you really rely on employee surveys to get you that mandate? Or have we got another couple of elephants in the room we need to address? Firstly, some people, quite understandably, raise concerns that if we're getting the numbers from employee surveys, the mandate seems to rely on people's subjective opinions. And secondly, in many organizations, employees seem to be suffering from survey fatigue. Both of these are perfectly valid concerns, so we need to address them before going any further. When it comes to the question of subjective opinions, there are 5 important points we need to make here. Firstly, although some of the answers employees provide in the surveys will be a matter of subjective opinion, they won't all need to be. For example, for many people, a lot of the time they spend receiving or engaging in internal communication, particularly at the more senior levels, will be through meetings. And for the most part, these are in people's calendars. This is not a matter of subjective opinion, it's a matter of documented record. And of course, not everyone's going to check, but they can if they're unsure. Secondly, let's bear in mind just how many business decisions are based partly or significantly on subjective judgments. The very fact that you got your job in the first place was almost certainly based at least partly on the subjective opinion of the people doing the hiring. And not just you, but everybody working in your organization. Then there are things like the choice of one multi-million-dollar marketing campaign over another, and of course virtually any and every decision taken on the back of annual or biannual employee surveys. Thirdly, we also need to bear in mind that there are subjective opinions and subjective opinions. There is a world of difference between someone expressing an opinion on how best to tackle global warming when compared with simply saying how much time they spend reading internal emails in a given week. The latter is a simple quantitative judgment rather than a complex qualitative one. And of course, there will be margins of error. Some people will overestimate, others will underestimate, and some people will probably be more accurate in their estimates than others. But as any researcher knows, that's when the issue of sample size needs to come into play to help ensure the numbers are robust, which means we definitely need to address that concern about survey fatigue if it's there. And finally, the initial audit can give you a benchmark against which future audits can tell you how much of an impact the sweet spot has been having, making the results of future audits more robust still. Unquestionably, though, the reliability of the numbers rests heavily on the robustness of the process, so we'll need to consider due diligence shortly. But before we do so, we need to address that other elephant in the room. Survey fatigue doesn't affect every organisation, so if this isn't relevant to you, I hope you'll forgive me if I address it, because it is a problem in many workplaces. And if employees are being bombarded with surveys, it would suggest there aren't sufficient controls in place to stop this happening. And maybe this hasn't been something you've been able to have enough influence over. Possibly both. And if survey fatigue is a problem in your organisation, there are actually two parts to the answer. The first part brings us back to the question of what your mandate needs to be doing for you and for your organisation, which it clearly isn't doing at the moment. So does your current mandate give you the right to control the use of surveys at present? If it does, then survey fatigue is saying that you need to change those controls. Or if you don't have that control or sufficient control at present, it suggests you need a mandate to extend your influence so that you can do so. After all, if your organisation has this problem, it clearly isn't going to solve itself, and as employee surveys are internal communication activities, it really should be in your hands, should it not? Which of course means your new mandate will also need to give you the other resources you need to handle that responsibility. And while an IC financial audit should never be the survey to end all surveys, it should be the survey to rein them in and help you ensure your organisation's approach to seeking employee opinions is increasingly fit for purpose. But that still doesn't address the concern over survey fatigue today. So that's where the second part of our answer kicks in, because it's possible to start an IC financial audit with a small-scale pilot study involving as few as 20 to 30 people. But even so, would an audit really be worth it? What can it show you that your business leaders don't know already? After all, it seems that everyone already accepts that there's plenty of waste tied up in employees' internal communication practices. But without specific, credible numbers to look at, leaders can't possibly take informed decisions about what it would be worth to invest to sort out the causes. And it's by giving them this ability that the audit can have a crucial role to play in getting you to the sweet spot and keeping you there. But how? Well, let's bring this to life with a real-world example. And this example comes from an audit of a UK financial services business with 5,000 employees. And here's just one of the things the audit was measuring: the amount of time being lost through this organisation's internal email practices. Now, the first thing we needed to do was to find out how many employees had their own individual email accounts. It turned out that in this business, everybody did. So one of the questions in the surveys was asking people how much time they would spend in a typical week reading internal emails from their colleagues. And on average, this turned out to be 5 hours a week. We also spoke to the senior managers to find out by how much we should multiply that weekly figure to come up with an annual figure they would consider credible. They told us to multiply it by 50 because people have holidays, but they return to a backlog, but then they tend to skim read the backlog and so on. Other organizations might say please multiply it by 48 or 51 or 49.5, but this business said 50. So that gave us an annual figure. And in the surveys, we also asked people what percentage of the time they spent reading internal emails was being wasted because they'd been sent stuff they didn't need, but they had to open it up and start reading it to find that out. Now, I've been doing this particular calculation with clients since 2001, and if there's one figure that people come up with more than any other in answer to this question, way more, in fact. It's 20%. So it was no surprise to me when that was the figure that this business arrived at. And when we looked at the cost of this time, it came to £6.5 million, equivalent to around about 10 million US dollars, and is being spent on simply paying people to do nothing apart from read each other's useless emails. And of course, this is just one part of wasted audience time, which itself is only one of the 5 costs we're measuring. Now, many people look at that figure and point out that IC specialists aren't responsible for tackling email overload. And while there are organisations that do want the IC team to try doing something about it, this is by no means always the case. But this example is here just to start giving you a sense of the scale of how much potential may be locked away inside your organization's current IC practices. And there are plenty of other areas the IC team can affect. So we clearly need to look at the bigger picture. Here are the results we got from the full audit of that financial services business. To help you make sense of these results, because some people can get a bit lost with this sort of thing, the blue blob at the top of the list obviously relates to the blue blob at the top of the pie chart, and as we go down the list, so we go clockwise around. Now, obviously, the internal communication function is by no means responsible for all these IC activities. In fact, it may be that the only thing they could have total control over is the mainstream production process. But there are plenty of other practices where a healthier mandate could have a positive impact. Firstly, there's the intranet, over which you certainly should have at least some control, and if you have enterprise social networks in your organization, you may be able to affect them too. And to a lesser extent, there are other areas as well. If your organization has any kind of team briefing process or cascade process, for example, you may be able to influence the quality of its content, even though you can't control how well it's delivered. And if time is being lost through repeat communications, for example, chances are at least some of those may be mainstream comms coming through the IC team. And even if they're not, let's remember that mainstream communications inevitably provide at least some of the raw material with which employees are thinking about their work, including their own communicating. So the quality of that raw material almost can't help but affect the quality of employees thinking and communicating. So is the content of that raw material all as relevant as it could be, or are employees having some of their time wasted with irrelevant information? And even if it is relevant, is it expressed empathically? Do employees always feel this is talking to me? Or might they sometimes feel that what they're reading is actually addressing someone else, even though it's not supposed to? Is it all as clear as possible, or are some employees struggling even to understand what they're being told? Is it all accurate? Is it complete? Or are employees having to fill in some of the blanks for themselves? Is it timely, or does some information arrive too late, again forcing people to resort to guesswork? And is it accessible? If people need some of that information further down the line, can they get to it whenever or wherever they may need to? Given the numerous ways that this raw material can cause problems if it's not up to scratch, it's not unreasonable to suggest if you can improve its quality, you could help reduce the need for some of those repetitions, for example, and at least some of the time people may currently be spending staring at a blank screen, chewing their knuckles because they can't work out what to say in some of the communications they have to produce. And last, but by no means least, better mainstream comms almost can't help but have an impact on at least some of the rework that currently needs to be done. So we can see that an effective mandate which can ensure that all mainstream IC practices are fit for purpose can have a widespread impact across a number of communication areas. And this means you can have a virtuous ripple effect on all these communication activities, even though you don't have direct control over them. But how great could that impact be? Well, in the case of this example business, the audit showed that at the time they were measured, their IC practices were costing at least 1 million plus hours a year. But that's such a big number that it's difficult to know quite what it means. Well, in fact, it amounts to nearly 12% of total employee time, or to put it another way, over 200 hours per employee per year. Now, of course, your organisation will be different, but this scale of credibly measurable waste should surely be enough to get your leadership team to at least seriously reconsider the investment they're prepared to make in your mandate. Or should it? In fact, it turns out we've got yet more elephants to deal with. Many people look at those numbers and say that surely we're just looking at time which is lost and you'll never get it back. Furthermore, the credibility of the numbers will obviously depend on the robustness of the process you've used to put them together. After all, as any IT person will tell you, if you put garbage into a system, you'll get garbage out. So clearly, we need to tackle these two elephants, starting with that fixed costs issue. Now, clearly, there's no question that you could never recover all the time being lost through the current IC practices, but it's absurd to suggest there's nothing you can do to recover any of it. In fact, with the right investment in fit-for-purpose practices and skills development, it's perfectly possible to recover significant amounts of that time, eventually maybe as much as 75 or 85% of it. But in the short term, what would 20% be worth? Or even just 10%? Even with that relatively small payback, you could effectively be giving your leadership team 1% more staff for free, permanently. Now, what they choose to do with those extra people would obviously be up to them, but surely it would be enough to get you the funding for the mandate you want, would it not? And of course, we've been focusing here only on reducing the downside of current IC practices. So let's not forget that in addition to the savings, you should also be moving towards having employees who are better informed and better motivated too. But of course, that still leaves the issue of garbage in, garbage out. So what do we do to address this? Starting with the concern about garbage in. First of all, an IC financial audit never relies on just one survey. There are multiple surveys, each targeted at a specific employee group. And there are 3 reasons we do this. Firstly, because different people obviously cost different amounts to employ. Secondly, not everybody does the same internal communication activities. For example, someone working in a call center is unlikely to be doing management blogs or getting involved in approving and signing off the communications produced by your team. And thirdly, even when everybody is doing the same activities, the relative amounts of time they'll be spending on them is likely to be quite different. So someone working in a call center may spend only a couple of hours a month in meetings, whereas for a senior manager, it may be 30 plus hours a week. Then there's the question of trusting people to be honest when completing the surveys. After all, a lot of the questions are asking people how much of their time they're wasting at work, even though it's not actually their fault they're doing so. So it would be understandable if some people might be a little bit nervous about being honest. And there are 3 things we do about this. From the start, the promotion of the audit is crucial. Whoever is sponsoring it needs to publicly acknowledge that no one can possibly be blamed for not knowing things that no one's even pointed out are there to be known, especially given that we're not born with an internal business communication gene which would just enable us to get it right instinctively without being taught. Then, the surveys themselves ask for no personal information from anyone completing them. We don't care what department they're in or how long they've worked for the organisation, nor anything else that might help anyone identify who they are. We also host the surveys for you. We use SurveyMonkey, so it's just as secure as it would be if you were using it yourself, but because the surveys are clearly being run by an independent company, it seems to give any employees who need it that extra bit of reassurance that their answers can't be traced. And finally, just in case anyone might be puzzled by any of the questions they're asked, we provide explanatory notes so that if they're not sure what a particular question is getting at, they can check their understanding before answering it. So we do as much as we can to underpin the integrity of what's coming in. But what about the results? Well, here we've put 3 safeguards in place. Firstly, the number crunching engine itself has fail-safes built in which can recognize rogue numbers. So if someone were to make a mistake and, for example, inadvertently suggest they spend 400 hours a month in meetings when they meant to type 40, or a disgruntled employee were just to enter silly numbers, the audit's number crunching engine will recognize them and discard those answers. We're also very clear about our caveats. We're aware of the limitations of any such statistical surveys and provide the appropriate health warnings. And perhaps most importantly, we put you in charge of the accounting assumptions. We saw an example of this when we looked at the email overload numbers, where it was the client that decided to multiply the weekly figures by 50 to come up with an annual figure. As we said, in other organizations, they might multiply it by 48 or 47.5 or 51. These decisions are in your hands. So you or your CEO, CFO, or whoever can adjust any of the audit's accounting assumptions so they accurately reflect your business model and the views of whoever needs to sign off on your mandate. So there's loads of integrity built into the system to underpin the credibility of your business case. And that's important not only for the sake of your reputation, but also because, as we've seen, the numbers can often be quite startling for many people. So if the principle of IC financial auditing makes sense to you, how would we actually do it in practice? Well, it's a collaborative process which involves 7 steps over a number of weeks, and the good news is that we can do almost all the work for you. First of all, though, before getting into any kind of financial auditing, we should have already the mandate you want. Well, if you're running a pilot study, you'd have some initial ballpark figures which would show your leadership team the likely amount of credibly measurable waste that's tied up in your organization's current IC practices, as well as the initial investment they'd need to make to start eliminating that waste and the kind of ROI they could reasonably expect it to deliver. Of course, those numbers would be pretty shaky, but for some leadership teams, it can often be enough to convince them to give you the budget you're after. And even if it isn't, they should at least get you permission to run a full audit or further targeted pilots so you can present them with a robust business case. One way or another, though, you should be able to demonstrate that giving your team the right mandate and the necessary resources to fulfill it would be the financially smart thing to do. So in short, it seems we can tackle all the elephants in the room and with just a few hours of your time, get you a compelling business case for the financial mandate you need. And if you think it would be useful to share this part of the VBook with your boss or colleagues so you can have an informed discussion with them about getting the financial mandate you want, by all means do so. If you think members of your network might find this VBook useful, please feel free to send them the link. And if you want to watch the final part before taking any further steps so you can see how to ensure the investment really pays off, then please go ahead. And if you don't have time to do this right now, then pop a date in your calendar to come back. And if you've now got more confidence that your overall mandate would be worth defining, you're more than welcome to drop us a line and arrange a chat.